Next up, we're diving into something, well, let's just say it embodies everything I love and hate about FinTwit. It's this new ETF, MST from Defiance. It's a coveraged ETF tied to MicroStrategy, which, as you know, is basically a Bitcoin proxy, and it pays you weekly income. Weekly? Sounds like free money, right?
Wow, that does sound pretty good. Leveraged gains and weekly payouts. What's catch? There always is one, isn't there?
Oh, my dear friend, you are starting to understand finance already. The catch is about as mile long, but let's break it down. First off, means amplified returns and amplified losses. This ETF aims for 150% to 200% off MicroStrategy's daily performance. Daily. So if MicroStrategy drops 1%, you could lose 2%. See how that works.
Okay, that sounds stressful. Is it really worth the risk for a bit more gain? Like, isn't regular investing enough?
Now that's a sensible question. And the answer is overwhelmingly yes. Regular investing, boring, steady, long-term growth. That's how fortunes are actually built. Not by chasing these hyped-up instruments. I remember back in '99, everyone was piling in a tech ifs. Premised moonshots. You know what happened. Poof. A lot of people lost a plot of money when the bubble burst. This feels familiar.
So it's similar to those then. The risk is just higher because of the leverage.
Exactly. And then you throw in this income component there, generating it through something called call spreads, which, let's put it mildly, isn't free. They're essentially selling options and pocketing the premium. It sounds great on paper until you realize those options have to come from somewhere. And that strategy adds complexity and risk. The document even says, and I quote, fund may not achieve daily investment results that correspond to 150% to 200% and may return substantially less. That's financial speak for could lose your shirt.
So they're admitting it. Might not even work as advertised. Seriously.
They are legally obligated to disclose the risks, yes. And there's a plot of risk here. It's tied to MicroStrategy, which is in turn heavily dependent on Bitcoin. You've had crypto volatility, software industry headwinds. They even list risk. It's like they're throwing every possible disclaimer at the wall, hoping something sticks. I saw a similar thing back in 8 with those mortgage-backed security apps. All these layers of complexity, masking underlying fragility.
Well, okay, that's concerning. So why would anyone invest in this instead of just buying MicroStrategy or Bitcoin directly? Or even a less risky ETF?
That's the million-dollar question, honestly. The thrill, the marketing is brilliant. It preys on FOMO, fear of missing out. People see, oh, in one package, and their brains short circuit. They think they found Appleful. But let me tell you something. There are no loopholes. There's only risk transfer. Someone is always on the other side of that trade, making money when you lose yours. And this ETF has that very high portfolio turnover rate, meaning more fees and potential tax implications too.
You make it sound like Astrap. A shiny, weekly payout from Promise Trap. What would you recommend someone do instead? Like, if they want Bitcoin exposure, but are worried about all this stuff.
Okay, good question. If you believe in the long-term potential of Bitcoin, buy some actual Bitcoin, or invest in that well-established, diversified crypto ETF. Even better, build a globally diversified portfolio with low-cost index funds and ETFs. Rebalance regularly, and don't panic sell during market downturns. It's not glamorous, it doesn't come with weekly income promises, but it actually works. I mean, seriously, the simplicity is its strength. I tell all my clients that boring beats brilliant every time.
So less rich quick, and more and steady wins the race. That makes a lot of sense. It's just tempting when things are presented like this MST ETF, like there's an easy path to profits.
Absolutely. And that temptation is exactly what they bank on. But remember, if it sounds too good to be true, especially in the world of finance, it almost certainly is.
You've definitely given me something to think about. I think I'll stick with my boring index funds for now, and maybe just observe from afar as people try to time the Bitcoin market with leveraged debts.